13, NASDAQ down about 15. There are buyers moving into treasuries, though. The benchmark 10-year note up 17/32, yielding 4.61%. Well, the hiring and bonus boom that Wall Street has enjoyed over the past 4 or 5 years may be slowing, thanks to continued turmoil in the credit and mortgage markets. Martinolich. No, that's not right here. It is Michael Martinolich. The thing says Martin, but, Michael, well, there you go. We got the last name right, I think, is a partner at Cromwell Partners, a Wall Street recruitment firm here in New York City. Michael, thank you very much for joining us. Tell us about the state of hiring right now and the state of pay on Wall Street.
Well, the state of hiring is in a bit of a pause, actually. Firms are, in the fixed markets anyway, are taking inventory of P&Ls and availability that they have to pay bonuses at year end. So while there are searches ongoing and active, many have been put on hold.
They have been. Where in particular? Anything with the bond markets, the mortgage-backed securities traders?
Finance, mortgage, ABS, and the like, CDOs and the like.
Hard to get hired in those industries right now.
Indeed. It's hard to move at the moment, but that could change. It's still early on in this process.
Okay. What industries do remain hot? Are there
Robust. Oh, indeed. Recruitment on both buy side and sell side is still fairly robust. On the buy side, i.e. in the hedge fund space, there is a strong demand for asset gatherers, for example. On the sell side and buy side, there's strong
What do you mean, like placement agents?
No, well, yes. Well, on the private equity side, yes.
Capital raisers.
Capital raisers from the institutions, which is what the hedge funds are.
There's still a demand for those people.
Significant.
Are they making salary, or are they making only a percentage of what they're bringing in? 200, 400 basis points, what are they making?
80% of compensation is commission driven or earned based on asset gathering capabilities.
Can you still raise assets in these environments for hedge funds, though? That's the key question. It can be a very those people, the placement agents, I know the last 5 years, this has actually been a story we should have talked about. Some of these placement agents have made gigantic sums of money, have they not?
Significant. In fact, that's happening also in the prime brokerage space. The cap intro guys have done well, but they see that they can do much better working for the hedge funds, private equity guys themselves, and have done very, very well. And it's still early. We're probably only in the third or fourth inning as regards asset gathering.
So there still is capital to be raised out there for hedge fund strategies, et cetera.
Specifically from institutional investors. The IBMs, the pension plans, endowments and foundations and the like.
Yeah, I'm sure CalPERS probably has about 100 visitors every single day, most likely.
That's right.
All right, so let's talk about the other thing that Wall Streeters care most about. It's A, I got to have a job. Right. B, my job has got to be better than the next guy's. But C, my bonus has got to be bigger than the next guy's. How are bonuses going?
Again, it's early to predict what will happen in 07. Clearly, in the fixed income space, the credit space, the structured finance space, there will be some hiccups for sure.
Hiccups meaning I was making $20 million, now I'm going to make 2? Or hiccups like 20 to 15?
You'll probably see decrease of up to 25% in bonuses easily. Now, some of the firms that have been hit hard may see very little bonus, quite frankly. So it really depends on the size of the firm, product focus, assets under management and the like. There are a lot of factors that will impact bonuses. Now you have to keep in mind, too, that bonuses and base compensation are a significant significant component of recruitment and retention. So firms have to be really careful about how they apply those bonuses and downgrades.
Yeah, and do you see companies changing? Let's say, listen, Michael, I'll bring you on, but I'm going to lower your guaranteed salary and I'll raise, basically more pay per performance. Or do you think we will see that?
You will see some of that, but not at the recruitment stage. You need to get good people on board first, and there is a dearth of very fine talent. I'm talking about the best in breed. There is really a dearth, and it has really been like this for now some 36 months. So firms have to be very competitive.
I would imagine it is so much about the book of contacts that you've got, especially in what we just talked about, which is the capital raising for hedge funds. It's really just the biggest, best Rolodex is going to get the biggest, best payday?
To a degree, although that's changed, too. Firms have really decided to hire folks who have the intellect, have the ability, have sold to institutions perhaps other products from the sell side, maybe from a pensions desk or a special situations desk. So they are being a lot more creative, as it were.
One thing we haven't talked about is that what was really the star of the bonus world the last couple of years, which seems to be completely unaffected by this, at least it seems, is commodities.
Right.
Commodities, women and men. I mean, are they just chugging along, making big sums and kind of on the side of all this trouble?
They seem to be so far. They seem to be. In fact, commodities, specifically the energy space, is a space where there's a lot of recruitment going on, both buy side and sell side.
All right, so a couple MBAs sitting out there wondering what to do, give them the top 3 or whatever industries that they should be looking for right now.
Clearly, energy. Beyond that, the CDO market and the structured finance products will come back at some point, but you're right, it's too early to be thinking about that. There are many derivatives, Asia, Europe, and the like.
All right, Michael Martinolich of Cromwell Partners. Michael, it was a pleasure. Good stuff. Thanks very much. Well, Lowe's shares on the rise after earnings came out. We're going to have details on the home improvement retailer. Plus, NASDAQ shares also up. The company giving up one takeover attempt but may pursue another. The NASDAQ's international exchange hunt story, probably the best way to say it, is coming up right after this short break. Stick around.